One thing that I'm unclear on, that there seems to be the most disagreement on, is inflation and what that means for benchmark rates. What do you think in terms of perhaps if growth picks up more than people expect on the heels of fiscal support, on the heels of a vaccine, that you end up with greater inflation? It forces the Fed's hand. They have to start talking about tightening, and that could crimp some of the performance here in fixed income.
That is a risk. As we look to the middle of 2021, what you'll see is that inflation readings will move higher above the 2% level. That could create some volatility in the marketplace. We believe that it's temporary. I think the Fed believes that it's temporary, but that could create some volatility in the marketplace in the middle of next year. But I personally don't think it'll force the Fed's hand. I think it's too soon, but that is a real point of contention for the markets as we hit the middle of next year. Those inflation readings are above 2%, and it puts pressure on the Fed to communicate clearly. And so that remains to be seen.
What keeps you up at night, Greg, in terms of your market call?
Well, actually, you touched on it. Inflation, I think, is something where we're of the mind that it is temporary, that it'll come back down. But if you see this breakout in inflation, which I don't really foresee, that could change valuations as it moves rates higher. It could change where you allocate capital within fixed income, within equity. So I think inflation is really the point of worry. It's a low probability event, as I actually see more disinflationary trends than inflationary trends. But I do think that is something that could catch us off guard.
The reason why I ask is because it strikes me that a number of people have said that this has been the greatest degree of consensus of groupthink that they've seen in their experience in markets. And I'm wondering how uncomfortable it is to go along with it, even if it is, so far at least, absolutely correct. I mean, does that concern you, given how one-sided a lot of market trades are?
Yeah, somewhat, but it's hard to look past the fact that we are actually moving to a better economic place. So growth next year is going to be quite strong. Earnings are going to be quite strong. So what the consensus is really looking at is that we've had this horrible year in 2020 with the virus and the economic shutdown at all. And 2021 is a better place. So I think that should be consensus to a degree. Where the question ultimately arises is whether all that news is in the price. And I don't think it is yet. So I think there's more room to go. But, next year is going to be interesting. So, I think there's reason to be bullish. But if the markets actually move too far, too fast, and valuations get overextended, then I think you have to pull back. But I don't think we're there yet, Lisa.